Welcome to today's training. This is another team prosperity team training that goes into different parts of our business model, breaks some things down, and takes some breaks every once in a while to go through general stuff, which is exactly what we did last week. And just real quick to recap last week, which all of the backlogs of our trainings are always available in multiple locations for you and your agents that come on board afterwards so that you guys can concentrate on income producing activities. We have a library of information we can share with them. But last week was all about just business success planning, execution of that planning, and then high performance strategies. So once again, if you missed that, it's always available for any type of replay. Today, we're going to get into something that hopefully you guys get value from. Because like I was saying when we were opening this meeting, I want to teach you how to sell life insurance without being the life insurance person. So today's training is all about life insurance. It's the purpose, the types, and selling strategies for life insurance, in particular in our model. How does it all kind of mesh or combine together to give you guys a whole financial planning business that covers A to Z so your clients don't have to go outside for additional resources as they come up in the plan? So today's training, once again, is just understanding all about life insurance at a deeper level, not just what it actually is, but why it's important, the different types available, and most importantly, how to effectively sell it within our model. Most people think of life insurance just as a policy that pays out when somebody dies. So there's a negative connotation associated with life insurance. They don't really understand the different types of life insurance and how those really fit into the financial planning business that we're trying to help build you guys as agents. In reality, it's one of the most powerful financial tools available for different parts of the financial plan, whether it's protection, growth, wealth transfer, combination of multiple parts of this. So this is what we want to get into today. Our trainings are always based on objectives and goals, not a specific time limit that we're trying to fill up. So sometimes our trainings can go for 20 minutes. Sometimes they go for 45 minutes. Our goals today and what we're trying to cover is how to position life insurance as a solution and not just a product. And then the different types of policies, when to use them. Remember, you need to be giving the clients the best opportunity to get in front of them what's going to best take care of their needs, their goals, their situation. And then how to seamlessly integrate life insurance into our business model. How do we sell a lot more life insurance at higher premiums without necessarily talking about life insurance on the front end? That's what we're covering today. Those are the goals. We'll go ahead and get into it. We'll start with the purpose of life insurance. So as you're out there speaking to people, we have a model that takes care of all the 6 building blocks of the financial plan, plus the 7th milestone, which is financial education. So the purpose of life insurance, first of all, is income protection. Remember, if somebody has income and then they're relying on the income and possibly other people in their inner circle are relying on the income, what happens if that income leaves for a period of time? So this is the most basic and critical purpose. If the insured passes away, their family will have replacement income to cover their expenses. Very basic income protection. If somebody has an income and other people rely on it, they need what's called income protection. So example of this is, a primary breadwinner in a household dies and their spouse and their children are left without a way to pay the mortgage or the bills. Life insurance ensures they don't have to struggle financially. They've just lost their parent. They've just lost spouses. So the financial stress of not having money to continue and pay the bills just compounds on top of the already existing stress of losing a family member, whether it be a parent or a spouse. So when you guys are out there talking to people, it's not about the risk of something happening because nobody really understands the risk. They don't want to compute or think about the risk of something bad happening to them. So you have to talk about the consequence. Hey, if this happened today, what does tomorrow look like? Income production is very, very, very important to keep the standard of living going for those people that you actually care about and are counting on you. If you don't have income protection and something happens to the breadwinner, it's a whole cascade of negative events that comes about, guys. Also, debt protection. This is what we talk about as well. When somebody is using our other services like the technology to pay off that debt quickly, we're talking about debt protection. Why? Because we've already mapped out the shortest distance to getting their debt paid off. Now we have to, along that trip, make sure that if something happens to our ability to make money, that our whole strategy and execution of that strategy doesn't fall apart. Many people assume that their debt dies with them, but that's not the case. Mortgage, loans, credit card debts can burden the loved one. So you have the income protection. Now you have the debt protection. So an example of this is a homeowner with a $250,000 mortgage dies unexpectedly. Without life insurance, their family has to come up with the money or sell the home. Think about losing your spouse. Think about losing your parent as a kid and then being foreclosed on and having to move and having a downgrade. That's terrible, guys. So what we do is important, but you have to package it up in language and verbiage that makes sense to the other side and helps them understand the big gaping holes of risk they have. And once again, if you step outside just the death protection, you're talking about living benefits. Now you're talking about, getting sick, getting hurt, getting ill, and the ability for that person who hasn't prematurely died to get through this period of time. Also, as a wealth transfer, life insurance allows people to pass on wealth tax-free. Think about the tax code in this country, the future tax code of this country, how high it probably will be to take care of our debt. So when you pass on money, you have to, hold on one second, guys. All right, thanks. So when you pass on money, it has to be in an orderly fashion that the person that you're trying to give money to, or the people that you're trying to give money to, receive that money without being taxed to death, basically. So life insurance allows people to pass on this wealth tax-free to their heirs, creating generational financial security. Life insurance is the first step to legacy building. So when you talk to people about wealth transfer and you talk about the ability to do it tax-free, that's an important conversation. So remember, you're not just out there selling insurance. You're having important financial conversations that could be, very, very, very important for these people down the road. An example of this, a policy leaves $1 million death benefit to their children, avoiding estate taxes and probate delays. That $1 million in full goes to the people that person wanted it to go to, and it will be distributed to take care of things, their upbringing, their education, whatever it is that they've intended it to go for, versus, getting taxed or going through probate court and losing as much as half. Your retirement and your wealth accumulation, once again, is an extremely important conversation. So when you're out there talking about insurance and you package it up in a conversation that incorporates retirement and wealth accumulation, it's a much easier conversation to have than trying to shove an insurance policy down somebody's throat, trying to scare somebody to buy an insurance policy. When you're talking about retirement and wealth accumulation, and you're talking about the ability to accumulate inside some of these policies with the ability to avoid market risk, avoid taxes, guys, these are important conversations. So certain policies like Index Universal Life, or what we call IUL, allow tax-free cash accumulation, withdrawals, and retirement. This is ability to take care of, once again, the slices of your retirement pie. And each one of those slices, does it have tax consequences? Does it have market risk? What does it look like? How much are our clients in control of their future, regardless of what macro tax or macroeconomic environments look like? So an example of this, business owner funds an IUL and later withdraws tax-free income to supplement the retirement. How many business owners do you guys think are out there that wear so many hats that their retirement is getting neglected? Would that be an important conversation for the business owner to sit down and talk to somebody about making sure they understand how to manufacture retirement, sometimes off the same money they're spending to fund their business? So understand the different ways to talk about insurance and understand the person that you're talking to, what's going to be the most important aspect of the insurance for them, and then just stay in that lane. You don't need to vary from that lane. What is the person looking for? What is their need? Let me create conversation around what the need is and the solution to that problem, not just selling them a product. Also, business protection. So this is another extremely important aspect of life insurance, key man insurance. So it protects a business in case a key employee or owner dies. So the business lives on if it's set up correctly. A buy-sell agreement, that ensures businesses continue by funding ownership transition. So all of these things, once again, they go back to life insurance, but it's like a bunch of tributaries leading into a river. You got a bunch of different lanes you can come in from, a bunch of different conversational points. You just need to know how to talk to people about life insurance without, quote unquote, talking about life insurance. This is an extremely important conversation for business owners to have as well. And then finally, everything we wrapped up earlier was talking about a death benefit, but I made the I talked a little bit about living benefits. This wraps it up because every industry, every business, a lot of products, they evolve over time. Life insurance is no different. So old life insurance was a death benefit only. New life insurance has living benefits. There is a great number of people that can still qualify for living benefits. They just have term insurance. It's the same as having a flip phone. Do you want a flip phone or do you want a smartphone? Things evolve, right? So people need the best products for the best time period that they are in. They don't want to have old, outdated products. Now, maybe they have it for a particular purpose, but if it's for overall protection, living benefits is the way to go because our grandparents, their parents, they mostly died from the things that, we're talking about heart attack, stroke, cancer. Many times we live through those, but they cause tremendous financial chaos. So many modern life insurance policies offer these accelerated benefits for critical, chronic, and terminal illness. An example of this is you don't have to die, right? Policyholder gets diagnosed with cancer and can use that portion of their death benefit while they're still alive to cover treatment costs, or there's no stipulations on how that money is spent. They can do whatever it is they want. So if you have income disruption and if you have extra expenses because a medical event happens and you have this bridge of capital that's given to you, you make it through that period of time. If you don't, there's two types of people. People who have assets, they're going to have to prematurely attack those assets because of this event. The other side is people who have no assets. They have absolutely nothing. Well, that's going to cause financial chaos and probably cascade into bankruptcy or a destitute living situation because if you look at the bankruptcies that are filed because of just medical expenses, there's a lot of them. So we can take care of ourselves and take care of our clients by getting the best products and services in front of them. Once again, not as a product or a service, but as a solution to a potential problem, a hedge to a potential, consequence or risk. All right, let's leave that and let's talk about the different types of life insurance because everybody has different health, everybody has different needs, everybody has different situations. So when you come across these different people, you need to be able to sort people into understanding what they need, what they would qualify for, and what they can afford according to their budget. There's the traditional term. There's a lot of different ways to sell term insurance. If you haven't sold term insurance over the last number of months and you've been in the business, you have to turn around and ask yourself, why? Every day, people are buying houses. People are having kids. You guys can get lists of these people and contact them or, put them on email list and get out in front of them with education. Once again, education is going to lead to sales. You can't sell to a broad cold market. If I'm giving an example of a list, you would have to warm that list up with emails, providing education and providing information that would allow them to get in touch with you. So term life insurance is just pure protection. It provides coverage for a set period of time, 10, 20, 30 years. It's going to be the most affordable option, often used for income and debt protection. Some of those reasons that we talked about earlier, term life insurance is a great product for that. It's best for young family homeowners, business owners needing affordable coverage. Key selling point here is high coverage for low premiums, especially if you get somebody earlier on in life that can lock up, the next 30 years at a low cost. Term insurance is a great hedge of risk and consequence of that risk. So when you're getting out in front of people, why would somebody need term insurance? Because they've had an event, they got married, they bought a house, they had a kid. This is who you're looking for. These people it's happening every single day. It's happening right now. Somebody's having a kid, somebody's buying a house, somebody's getting married. Just get in front of these people and get them education and information to allow them to make, buying decisions based on that education that you're giving them. Outside of term insurance, you have whole life insurance. Whole life insurance is lifetime protection. Remember, it goes throughout the lifetime and it's got cash value. It is a permanent policy. So whereas term would have an expiration date, whole life does not have an expiration date. It's a permanent policy with guaranteed death benefit and cash value accumulation. Some policies pay dividends, allowing for some wealth building over time. This is going to be best for your clients who are looking for long-term planning of estate protection. You want to build up that estate so that you can pass it down to your heirs. And also business funding is another one, a good one for whole life. Key selling points here is going to build cash value while ensuring lifelong coverage. It is permanent coverage with cash value accumulation. So whole life is one of the permanent policies. Another one of the permanent policies is IUL, what we call Index Universal Life. It's growth and flexibility. So the cash value is tied to market index. So whereas whole life is tied to the performance of, like, let's say, the actual company that it's representing, the cash value and the interest crediting on IULs goes to market indexes. But it has guarantees in there, which are called floors. Jim Morrison of The Doors said you can't fall off the floor, and he's exactly right. You have a floor. So as the market is tanking, you're sitting out those market years, maybe getting a quarter of a point to 3/4 of a point, but let's say less than a 1% rate of return in the worst of market down years. That's going to be a lot better than down 20, 30, 40, 50+%. And it's got caps. The caps are the most you can make. So you're going to be collared into a position between X and Y, the floor and the cap, every single year. This is to help protect against market downturns. What is this doing? This is creating stair-step growth throughout the life of the policy. On the back end, as you're taking the loans out or retirement income, they're tax exempt, tax free, whatever it is that you want to call it, so that as that national debt becomes a bigger and bigger problem, as taxes go up in the future, and as those 401ks and IRAs, if they're not Roth, are taxed, there's a gross and a net, just like when you get paid with active income. Same thing here. If you're tax exempt, all that money is coming back. That means that you're not at the mercy, and your standard of living is not at the mercy of what the tax environment is. This is best for establishing retirement income. This is also great for high income earners and business owners. So understand who you're talking to, why they would need a particular solution, and then learn how to talk to them about that particular solution to their problem. Key selling points here. It offers market-like growth with downside protection. There's arbitrage opportunities. There's a lot of things that we can go into. And once again, if you guys like this type of training, we can go more in depth on some of these policies. I just wanted to kind of do a broad overview today. But IULs is something that has really grown up over time. There are some bad feedback online about IULs, and really that comes from two things. Greedy agents just writing terrible IULs to maximize their commission, or what we call lack of knowledge. They just don't know how to structure these things. So they structure them the best they can, but because they have no coaching, mentorship, training, or support, and they just give their client, unfortunately, unbeknownst to them, just a terrible policy. What we do is we create foundational policies, and that is something that will help you. Not if all the stars align, this is going to happen. We feel confident at these levels. If this looks good, we can go forward with this solution or part of your financial plan. And there's final expense. Final expense is burial and end of life costs. That's it. And you see that stuff out there, like the GoFundMe for somebody that died. They're just looking for burial expenses. That could have been covered with the final expense policy. So these are simplified underwriting. There's no medical exams. For our other stuff, our companies that we work with, we also have, some great underwriting with no medical exams as well. But the crux of final expense is it's going to be burial. It's going to be low in coverage, somewhere between $5,000 and $50,000 to cover those funeral expenses. And this is best for people who didn't take or who weren't offered life insurance, earlier in life. Maybe they weren't offered it, didn't take it, neglected to take it, or nobody offered. They just weren't aware of the needs for life insurance. So now they're older and they have some health concerns. Maybe they can't qualify for other things. Key selling point here: should be affordable and easy to qualify for. Once again, life insurance, like final expense, if we need it, it's not going to be an exciting purchase for the client. If it's something that's needed, you're there to help them get it checked off the list and moved on with their life. And then there's hybrid policies. So you have like the life plus the long-term care benefits. And long-term care is something that, as the aging population gets older and older and older, there's more needs for long-term care. Most people neglect this in their financial plan. This is something that a lot of states are implementing, or some states are starting to implement a mandatory need for the long-term care. So you can go into those states, you can offer long-term care, but this allows the policyholders to use their death benefit while alive. So we're combining life and LTC. This is best for clients concerned about long-term care expenses. If you go in an assisted living home, it's going to be like 5, 10, 15, 20 grand a month, depending on what you need, where you go, and the level of service that's provided. It's very, very expensive. So you can imagine how 100, 200, $400,000 saved up would just kind of diminish very quickly because somebody in your family, your spouse, your mom, your dad needs that need. So a key selling point here, it provides dual protection, life insurance and long-term care coverage. A lot of the living benefits, the same qualifiers of the long-term care. So when you're talking about life insurance, you're talking about long-term care coverage, we can take care of a lot of that need in some of these hybrid policies with living benefits. Let's move on to how to sell life insurance, because that is going to be, once you learn how to sell life insurance, it's relatively easy to sell life insurance because you're just selling life insurance to the people who need it as part of their financial plan and who have a need for it. You're not out there trying to cram it down somebody's throat or use scare tactics or do anything like that. You're providing a need, providing a solution. What does that really mean? Well, let's talk about it. Needs-based selling versus traditional selling. What is the traditional selling? Do you want life insurance? Why don't you want life insurance? You need life insurance, blah, blah, blah. It's just pushy sales tactics that really don't work, and it's off-putting in today's marketplace. Our approach, what financial gaps would your family face if something happened to you? Education-based selling. So you're proposing questions, you're proposing scenarios and situations and forcing people to think about, hey, if that happened. So you're not selling life insurance, you're getting people to think about what would happen, how things would look, what that day would look like if something happened to them, their spouse, or whoever it is that you're talking about. Clients are not going to buy products, you guys. They're going to buy solutions to their problems. So use financial analysis and debt elimination reports to show clients where life insurance fits in to their overall strategy. If you're running, for example, like a savings report on debt, and they've got X amount of debt that includes an X amount or a Y for a mortgage, 500,000, 750, whatever it is, it's a great time to start bringing up insurance, mortgage protection, because especially if the income is one-sided or somebody provides a lot more of the income than the other person, there's definitely insurable needs. So maybe just because you're not talking about insurance at that moment doesn't mean it's not a good time to possibly bring up the insurable need, depending on what you're talking about to the client and where you are in that conversation. Selling through some of our other sources and sales channels. And this is where I think that our model really helps an insurance agent, because you can sell insurance without leading with the insurance conversation. It makes it a lot easier. What do we mean? Well, the Money Max clients, these clients are already looking for financial solutions. They're interested in our technology. They're interested in debt to wealth solutions. So position life insurance as their offset vehicle for wealth creation. Remember, inside the Money Max account technology, the offset vehicle, that's like the vehicle they're traveling in. It's their choice. It can be checking savings. It can be lines of credit. It can be liquid insurance contracts. And then we teach them the only way to simultaneously use the same dollar to cancel interest and earn interest is by using the liquid insurance contracts as the offset. You can sell some high premium life insurance as the offset vehicle by teaching people in the debt to wealth system how that works. The biz to biz equity opportunity. Well, we can recruit agents while also introducing them to policies for their own needs and clients. You are seeing in that biz to biz equity opportunity, licensed agents and non-licensed agents coming in because of the size of the equity opportunity. Non-licensed agents, they're going to be hearing all this for the first time. They're probably going to be interested in some of these products. So understand that when you're doing something like building this opportunity for biz to biz, sales comes from recruiting. And, that is something that we need to understand. You can't just go after licensed insurance agents in this particular opportunity because A, the non-licensed people are interested in this opportunity, and B, it's a lot easier to get sales through recruits if they don't already have existing life insurance opportunity. And then Wealth Transfer Alliance, this is a great piece of the business model to target business owners and high net worth individuals who need estate planning. Remember, it doesn't matter which building block you go through in the financial plan. Once you're in that building block and helping them with that need, you can help them with all the other 5 building blocks to take care of the full financial plan. Also, WTA has a unique opportunity because your agents don't have to be licensed because they're not actually doing the selling here. So there's a great opportunity to sell, health insurance, estate planning, employee benefits, all by just getting some interest, passing it over to people that can help close the deals for you. You concentrate on your other side of your business because they're going to kick that client back to you after they've been able to help them. And then you've got the door. Trust, rapport, credibility is built. And now you can start talking to that either high net worth individual, business owner, household, whatever it might be, about the other needs. And that's, the group life insurance opportunity to be able to go out and get in front of business owners and save them money, get them a better health insurance policy, and possibly get them a lower deductible. Now you've got that business owner's ear. So understand that what we're trying to create with this model is several entry points into somebody, whether they need, A, B, C, D, or E, doesn't matter. We can take care of all of it. We take care of what they need at that time and then open up the rest of it. I'm going to close out with just a couple things. And so these are some key strategies for closing more sales. You guys need to learn how to talk about, tell stories and case studies. I come from a numbers background. I'm a numbers guy, stock, commodity, hedge fund background, all numbers. So, this was marketing, language, all this stuff was new to me when I started to do this. So use stories and case studies. An example, a young father with no life insurance suddenly passes away, leaving his wife with $200,000 in debt. Show how a simple policy could have prevented that financial devastation. If you've been in here long enough where you've got these examples, use them. If you don't have examples, of your own, just use general examples. Create urgency. If somebody needs insurance, that's not the time to get insurance. That would be the same like, hey, I'm not going to have auto insurance. If I get into a wreck, I'll just call, whoever and get that policy right there on the side of the road. You can't do that. So you have to create urgency. Would you rather pay pennies today or leave your family with a financial crisis? It's your choice, A or B. I'm just here to help you understand what your choices are. Every day without a policy is another day of risk that you have. Is that something you want to go through, or is that something you just want to get off the checklist today and move on with your life? Handle objections effectively. People don't want to buy insurance. Why would they? Hopefully, if, for example, like term insurance, the insurance company is hoping, the client's hoping that it's all going to be a waste of money, that they don't have a premature death. They don't have a heart attack, stroke, cancer, disability. But if they do, this is why the conversation is important. It's too expensive. Well, how much would it cost your family if something happened to you? I already have life insurance at work. Great. What happens if you leave your job? Voluntarily or involuntarily? And then, guys, leverage referrals. Ask every single client, who else do you know that might need this level of protection, might need to speak to me, or if we're talking about something else, might need access to this very valuable information. Referrals are going to keep, a client is one lane. If you service a client, it's great. Our average client, we end up selling them over 3 things. So it's a lot easier to go out and find one client, sell them multiple products that can help them than to go out and find 3 or 4 new people. Inside the realm of those conversations, you also need to leverage referrals, because that one client that you sold 3 products to, they hang around with like-minded people. Entrepreneurs hang out with entrepreneurs. Doctors hang out with doctors. Entrepreneurs or business owners hang out with business owners. So if your persona is that, go into it. Leverage those referrals. Get more and more from your client base. So this is the Q&A action plan that I want to kind of think about for the upcoming days. Coming off this meeting, life insurance is more than just death protection. It's a financial strategy. So you need to educate your clients. Don't sell. Help clients understand the actual value of what you're doing and why it's important. Use multiple sales channels to create new opportunities. If you've got something working, great, but don't neglect opening up more sales channels, because if that sales channel, that only one sales channel has a problem, then your whole business has a problem. Action step. If you're building an agency, you need to start working with your agents, and you need to start helping them sell life insurance, because once they understand how to sell life insurance, they can teach other people. You guys are going to grow some monster organizations. So each team member really wants to concentrate and write down 3 things they're going to do this week to implement some of these strategies. And once again, if you've been in for a while and you haven't sold life insurance for a number of months, you have to ask yourself, why don't I have policies coming in? Because we're not getting in front of the right person with the right message at the right time. That's what today's all about. If you're building an agency, role play with your people, help them overcome those objections, and help them with some closing techniques that will really push them and their business forward, because the more that you do for your agency, the less you're going to have to do for your agency down the road. I hope that makes sense, because you're building distribution, you're building independent agency owners. So a lot of work that you did in the front side multiplies and magnifies on the back side. People don't need you as much. They have a business relationship with you. They probably have a personal relationship. They don't have all the questions. They don't have the mentorship issues. They're out on their own. What we want to concentrate on going forward is more sales, more business growth, more income, more confidence, more people help, more, because this is not, once again, I've said this over and over and over again, this is not a parasitic relationship with your client where you are harming or hurting them. Everything that we do for the client is for the benefit of the client, to put them in a better position to beat the banks, win the money game, and to make sure that as those things come up, those possibilities, that we have hedges against them. Asking for help is strength, guys. So if you're out there struggling, understand that we're here to help. We're not mind readers. We don't know that somebody needs help if they're not speaking up. Raise your hand, ask for help, but understand, and I've said this plenty of times before, if you come to us for help, the first thing I'm going to ask is, what have you been doing? Because if it's nothing, that's something I really can't help you with. You have to open your mouth. You have to dial the numbers. You have to send the emails. You have to do the direct messages. I can help you with everything else. I just can't help you with the activity. That's up to you. So we're going to stop this recording.